A new week is upon us here on Wall Street, and to say the vibe is positive would be an understatement after last week's strong results. Leading gains, easing inflation concerns after both producer prices and consumer prices for the month of March came in better than expected, injecting optimism into the markets despite ongoing recession concerns. Concerns spurred by the Fed's latest FOMC minutes report that said the central bank expects the recent banking crisis to cause a mild recession later this year. But again, the markets did see overall positive results, and that's where we stand right now as this new week awaits. Will the markets continue to rise, or will we see the return of the bears? Let's now take a look at what will likely move the markets into the week ahead. Monday kicks off on the quiet side with the release of U.S. 3-month and 6-month bill auctions, so the action technically picks up on Tuesday. First, we're in China with the release of the Chinese first quarter GDP numbers. Expectations call for a rate of 1.3% quarter over quarter, 4.8% year over year. Then it's off to the UK for the British ILO unemployment rate for February, a rate that's expected to remain unchanged at 3.7%. While here in the U.S., building permits and housing starts await. March housing starts expected at 1.38 million month over month. Wednesday sees both consumer and producer prices out of the United Kingdom, while for the EU, March harmonized consumer prices await. Expectations for EU consumer prices, 0.9% month over month. While in the U.S., we have the release of the Fed's Beige Book. Thursday kicks off in China with the People's Bank of China's interest rate decision, a rate that currently sits at 3.65%, while in the EU, preliminary April consumer confidence due. Expectations call for a read of negative 19.3. And in the U.S., the Philadelphia Fed manufacturing survey awaits, expectations calling for a read of negative 15.4. And on Friday, global manufacturing, composite, and services PMI reads all due out of the combination of the UK, France, Spain, Germany, the EU, and the U.S., while in the UK, March retail sales on the docket. Expectations call for a rate of negative 0.1% month over month, negative 4.5% year over year. And just a reminder, keep an eye on the earnings front here in the U.S. as a new earnings season is finally upon us. Always a market mover. And until next week, live from the New York Stock Exchange, I'm James Sweeney reporting for ICF.